Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Martin Boyd, President of Capital Market Solutions at FIS Capital Markets, to discuss how capital market firms are approaching remote work environments, the impact to growth, and prioritizing technology investments. Martin, it's great to see you. Welcome to Trade Talks.
Hi, thanks, Jill, and thanks for talking to me. FIS provides mission-critical front-to-back office technology and trading platforms for brokerage firms and buy-side firms, both in the US and globally. And so we've lived through the significant market volatility and how our clients have reacted over the last 9 months.
So let's talk about that. How did it shift from Q2 to Q3 in terms of how they're approaching work from home? What trends are you seeing there?
Well, so we did a couple of pulse surveys that you're probably aware of that looked at the activity between and across those periods. And the biggest shift we fundamentally saw was an acceptance that the impact of working remotely will go well beyond the current crisis, in as much as then people are now seeing opportunity and benefit in that and the possibility of being able to do it, whereas before they had blinkers on.
Why are more firms considering a remote working model beyond COVID-19?
I think cost is a leading factor in those decisions, in as much as if you don't need the real estate footprint, then you'll make a decision related to that. But equally, I think attracting and retaining talent is a strong driver for the shift. And I think the workforce of the future has grown up with a much more virtual interaction, and this is what they're going to expect.
Well, of course, I mean, they're digital natives, the younger men and women coming into the workforce. So how will this impact global expansion and the office footprint?
So when we were talking to our customers and doing the survey, only 34% said that they were expanding into new geographies over the next 12 months. That's down slightly from 45% earlier in the year. I think what's important, though, is not that that necessarily means it's less important longer term, but I think they just have other priorities in the shorter term. What we have also seen, though, is that over 68% of the largest firms, so this is over 20 billion in revenue, are planning to reduce their physical footprint, and only 21% significantly say they're going to bring employees back into the office soon.
What are some of the pressures that could impact growth?
Well, I think interest rate environment creates a backdrop that makes it extremely challenging, but equally CapEx pressures continue to be a driving factor. And most of them referred to those two areas which were going to affect them. Interestingly, change was not seen as a significant barrier and not seen as a significant challenge in the current environment. And for example, we're running over 1,000 simultaneous projects with capital markets firms globally and across the client base. So, change is still something they're keen to do and drive.
Well, of course, technology is paramount for being successful in today's digitized markets, and a big chunk of that investment is going to go there. Where are firms prioritizing technology investments?
Well, I think the digital experience is a key driver, and that's being able to modernize client-facing systems so that they're able to either retain or improve their competitiveness. That number's up from 40, so it went from 40 to 46% as we went through Q2 and Q3, but it's always featured strongly as a key driver. We've also seen, though, that almost 50% have put a greater importance during the crisis of managed services and leveraging cloud technology. And that's significant because they're seeing a general trend there, looking at their outsourcing what are mission critical activities, but not differentiating them in the market. And so they're looking to move those services to vendors such as FIS and others so that they can focus their time and attention. And that's a big shift from where we were probably a year ago, where it was people were thinking about whether that was important. Now they're starting to act.
All right, Martin, appreciate the insight. Thanks for joining us on Trade Talks.
Thanks a lot. Bye, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.